guys, what's up? Hope you guys are having a great day today. My name is Matthew Spazzetti, and welcome back to the channel. Today we're going to be doing the weekly market analysis, which is a series I do. I used to do it where I was going over live data, and I showed you guys how I came in and I entered the market each and every day. However, I decided that it was causing a lot of extra work when I was doing that. So I explained this in the last weekly market analysis video, but from now on, at least until I'm done backtesting, we're actually going to be doing the weekly market analysis on my backtesting. And I'm going to be showing you guys how to backtest currency or any other market or asset for that matter, whether that is a stock, whether that's bonds, cryptocurrencies, futures, gold, silver, whatever. It doesn't really matter. I'm going to show you guys how to go through the backtesting, just the backtesting phase of your trading journey. I think this is very valuable. I know that, when I was just starting out, I wish I had someone to showing me how to actually backtest a strategy. I was showing some minor things, but for the most part, I had to figure it all out. So I'm going to show you guys how I'm going to be backtesting in the weekly market analysis series that we were doing a lot, at the start of the channel, and we're going to continue to do that. And I'm going to try to do a weekly video, although I can't really guarantee that, as my life is very, very busy. I take care of my almost 2-year-old daughter. It's crazy to think that she's 2 years old, but anyways, life is crazy. I'm going to try to do once a week, but we'll see how that goes. Either way, let's go ahead and hop into the charts. All right, so last time we left off, I was actually, let's go ahead and go to the Excel sheet here, the Excel sheet. Last time we left off, actually, we were testing. And if you look at the Excel sheet here off to the left, this is the column that has the dates in it. And basically, we were going from, I think we went from like 2008, something like that. And the goal was to backtest from 2008 all the way up to 2010. Well, I couldn't really record all of that information, but we did I did essentially do that. I essentially backtested and ended up connecting the data points from 2009 all the way up to 2010 because I did some preliminary testing before where I actually tested from 2010 into 2013, and I did a little over 100 trades when I did that. And the purpose and the point of why I did that was, I wanted to see whether the strategy was going to be successful or not. So I decided to go ahead and do a preliminary testing of 100 trades or a little bit over that. And so what I found was that, yes, this strategy had a positive expectancy to it. The problem that I had was that while there was a positive expectancy, unfortunately, when I went back further and did a more serious round of testing, it hemorrhaged cash for like 2 years in a row. So I'm seeing that as a bit of a disturbing thing. Actually, if you look here on the Excel sheet, let's go ahead all the way up. I'll show you the chart. So as you can see here, literally, when we first started, we started off with $3,000. We went up to $3,186, and then we tanked from $3,186 to $1,461. Not exactly a shining example of what you should be looking for in this. It's not really something you want to trade. Okay, let's just say that. You don't really want to trade something like this. So, but eventually we go from 1461 all the way up to 4,527. So we do see some profitability, but I don't know. Is this something I really want to trade? I mean, it hemorrhaged cash for 2 years in a row. That's a really long drawdown for me personally, and I don't know. I don't know if I really, really honestly want to trade something like that. So with that said, I decided to do a little bit more testing, and I'm going to be going from 2013 up into the end of 2016. And after that, I'll finally be done, and I'll make my judgment call whether I want to add this currency pair to my trading portfolio. So anyways, with that said, let's go ahead and hop into the charts and continue our testing. So as you can see, the market came down and closed below this structure, this candle wick right here. And the market appears to be going back up. So what we can do is we can take our Fib retracement tool and measure from this swing high, 89.68. You can see the numbers off to the far right there. 89.68 to swing high to swing low to 88.47. And we could put our entry right here, the 618 Fib retracement, which is the golden mean, the golden ratio. It's found all throughout nature and all that kind of stuff. It's supposed to be like the golden ratio. So anyways. And we can go ahead and do that. 89.22, that's our entry. We'll go ahead and we'll place our stop loss 10 pips above the high here, 89.68 so that would be 89.78. Let's find it right here. There we go. We'll go there. And then we'll place our stop loss at the lowest point, the lowest body of the candlestick, the lowest point of the body of the candlestick, which would be down here. Now all we need to do is wait and see whether or not we actually get filled. So let's go ahead. First, let's color these in. We got green for targets, yellow for entries, and red for stop loss. All right. So let's see if we actually if we actually get filled here. Okay, so we do get filled. I'm not sure exactly at what point that was, whether that was, oh, okay, so we did get filled right there. So good. So we got filled here. Honestly, this is not a major structure level to me. So I'm kind of thinking that the market, and especially with this big engulfing green candlestick, I'm kind of thinking the market is just going to continue to rise up and stop us out. But I can't really imagine it's going to be very a big loss. So let's go ahead and see exactly how much money we would be risking here. So let's see. All right, cool. So we're risking $56 for $63. All right. So our risk reward is in our favor. Let's go ahead and see what happens here. Now I haven't done, so you see right there, I haven't really pre-tested this out, so I really don't know the performance, but look at this. Or I really don't know what's going to happen here. But as I suspected, the market rose up and stopped us out. So that was 8/6/2013, August 6th. Whoops, August 6th, and it was 00:00, 12 a.m. in the morning. It's a little disappointing, but it is what it is. But all right, so we're rising right now. Let's see if we zoom out here. Okay. All right, so we're rising. Let's see how high we go. All right, so here's something that we can do here. One thing that I wanted to kind of look into was I kind of paused the recording and everything, and I actually went up and like zoomed out of the charts. I don't like to do the zoom out with you guys here because honestly, it's a little difficult for you to see on the charts. And, you know, the more I zoom out, you know, you guys don't get to see it nearly as crisp and clear as I do. But for the most part, you know, if this market was to come all the way up, you know, we could draw our fib retracement level from this high, this swing high right here. Let's zoom in a little bit so you guys can see that a little better. This swing high right here, which would be 93.16. So you look at the numbers over here, 93.16. So you would go ahead and you would draw it from that swing high to the swing low right here. And you would get 91.37. That's where the market needs to come back up in order for me to get short, right? Unfortunately here, I don't know if that would be a very large trade. So that would be one way of handling it. You know, we could definitely put an entry or potential entry right here. And, you know, kind of, and, you know, maybe color it orange or something like that so that we know it's a potential entry. Or we could color it yellow, I suppose, at least for now. So that would be one way to handle it. The other way is that we made a new high here. Now, granted, not with regards to the structure off to the left, but with regards to this immediate structure right here, we have an initial low, an initial high, an outside return, or a retracement, right? And then we had a new higher high, higher close. So what we could do in this situation is measure a fib retracement tool from here, 89.18 from the swing low to the swing high, 90.35, and we could, you know, put our entry here. I have no idea whether we'll get filled or not. Nope, you see it kind of just continues to go higher and higher and higher. So unfortunately, we don't really, nothing really happens. I was hoping it would come down a little bit more and we could go ahead and get long because I'm under the impression that we could be trying to reach, you know, trying to come up here. If we zoom out, if we go backwards a little bit in the charts, what do we see where that 618 fib retracement is? Look left, structure leaves clues. This is one thing my trading mentor said all the flipping time. And got a little annoying to be honest, but he's right. He's absolutely right. Look left, structure leaves clues. And if you look left, what do you see? You see right here, this 618 fib retracement that we measured from this top up here ends up coming down with a lot of market confluence. There's a lot of things that are happening. We got the market came in and retested over here, and then retested again over here, and then over here. So 3 times the market retested that spot. So let's, so when we see it kind of coming up, I think the market's going to try to come up and retest that area, maybe even a little higher. So with that said, I think also that the market will come up, or at least there's a good chance. So let's see what happens. So we keep going up, 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 up. So, all right, so we did end up getting so okay, we can get short here. Let's see. Let's go place our target down here at 88.59, and we'll place our stop loss 10 pips above the high, 93.16. So we want 93.26.4. Let's see if we can find that. And 90.26.3. That's good, close enough. And then we'll color everything in. Oh wait, no, that's the target, so that needs to be green. And then we need to do this over here. We need to put this red right here. All right, good. All right, cool. Now let's go ahead and put it in the Excel sheet. So we're looking at August 9th. August 9th, 2 a.m. in the morning. So probably not a trade I'd realistically would take, because I probably would be asleep. Just saying. And then we're trying to short the market again. Hopefully this time will work out a little better. Then it's Friday. It's Friday. It's Friday. Everyone loves Friday. All right. And then now let's see. I love Fridays. I don't know about you guys. I love the weekend. I love spending time with my family. I love just kicking back and relaxing and enjoying the weekend. I love doing that. All right. Our entry is 91.36. Let's write that in. Now, we still need to do the math to make sure that this is going to be fit into our risk-reward ratio, but, let's write everything in to see. 93.25. And then our target, is 88.59. All right. Let's do the maths. 91.36 minus 93.25 is $189. So it is within our risk tolerance. We can take this trade. For those of you guys who are just joining me, I'm not allowed to take trades. I don't allow myself, is what I should say. I don't allow myself to take trades that are $200 plus. So if it's $200, I think I can take a trade that's like 200, but I can't take a trade that's above that. So, all right. So now we get to go ahead and see what happens. So we're just going to continue to inch this market forward. Let's go ahead and zoom in a bit more. All right. Let's see. I mean, there's no guarantee that this is going to continue in the direction that it was going. There's never a guarantee with any of this. But this is how you do a successful trade. This is how you become a successful trader. You find a strategy. Okay, first you learn all the skills associated with trading. Learn how to read a price chart. Learn different market order types, limit order to a market order, whatever, long, short. And then once you've learned all the basics and you understand what trading is, how you make money in it, and you understand all that, now the process is putting it into action, taking all of that theory, all that knowledge, put it in action, and create a strategy. Once you've created the strategy, you've written the rules down and everything, then you go and you test that strategy over historical data. You need to find a strategy that has a positive expectancy. Okay, what that basically means is the strategy, it performed well over historical data, so there's a good chance it's going to perform well over live data, and that means that there's a good chance that you're going to make money when you actually trade this live with real money. Now, the performance is not going to be 100% accurate, right? I mean, historical performance is not indicative of future returns. We've all heard that saying, and it's very, very true. But that doesn't mean we discount historical data. History is the only measuring stick we have. It's the only ruler that we have. If we don't use it, then we're basically flying blind, and we don't want to do that. So while it's not a perfect predictor of a strategy being successful, it's the best we've got. So it's what we need to use. So let's go ahead and continue. But that's the point. You need to find that edge in the markets, and that's how you find it. You learn all the stuff that you need to learn about trading, and then you go ahead, you create a strategy, then you test that strategy, and if it looks like you have an edge, then you trade it. That's what you need to do. That's how you become a consistently profitable, successful trader. You find that edge in the markets. That's how you do it. So that's what we're doing right now. Do we have an edge in the Australian dollar versus the US dollar, Aussie USD? Do we have an edge in this market? So far, we kind of do. We have made money, but it kind of depends. So let's go ahead and continue with this particular trade. You know, we went and we got entered. Let's see what happens. It's kind of looking like it's going to continue to go up, but well, I don't actually now I have no idea. I really don't know. I haven't tested any of this out. It's going higher. Honestly, with trades like these, this strategy doesn't usually perform well. Just going to say that, but you know, I don't know. We'll continue. It's going down now, so I don't know, man. Maybe let's keep going. Just tank and give me my money. Just give me my money. I hate it when the market does this. It goes sideways. It like plays with your emotions. It's so annoying. I hate it. I like it when I get an answer, whether I'm right or wrong. I like it when I get my answer fast. I really don't like it when I have to wait for the market to come about and whatnot. I absolutely hate that. But anyways, are we going lower? Looks like we went a little lower here. Still just trying to tick the markets forward. You see, it's just going sideways. Now it's going up again. Going up even higher now. Going up even higher. Looks like it's reversing now. Oh my goodness. See, it reversed all the way to the entry. This is not a good sign. This is not a good sign at all. Lots of consolidation. You see, this is what you do when you're backtesting. You find a trade, you enter the trade. This was a relatively big trade. We were risking like $189. So yeah, it usually is going to mean we might see a lot of consolidation like we're seeing right now. Let's actually zoom out a little bit more. Yeah. All right. Yeah, I honestly don't know, guys. I mean, I'm thinking this is going to get stopped out and we're going to lose $189. I mean, it's all hypothetical money anyways, not real money, but still, it sucks nonetheless. Yeah, we're going to get stopped out for sure. Pretty sure. I mean, it's possible. Yeah, okay. I was gonna say before we got stopped out. I was gonna say it's possible for the market to turn around, and just barely touch your stop loss or barely miss it, and then turn around and whatnot. But I mean, that doesn't happen very often. Odds are, if it's going in that direction, and particularly with this currency pair, you're gonna get stopped out. All right. So September 11th, 1300. Let's go ahead and enter that in. Minus 189. Such a painful loss. It really is. Again, I know it's not real money, but it's still painful nonetheless. I mean, I really don't know how I can describe that to you guys. It is an incredibly painful experience when that happens. You know, it just is. All right, so let's go ahead and see what the market is gonna do. So that we got stopped out, we broke above this high right here. Again, we zoomed out a lot. I don't know if you guys can see that, but we did break above this high, all this cluster of market action. So this is a trend reversal. You know, we didn't know it was because this didn't break out above structure. So, you know, it kind of came up and then it just rallied. So is this, I mean, we're still, we broke above here. So previously we've been bearish. Now this could just be a complex pullback, a two drives complex pullback where we retrace, we come back, we look like we're continuing the trend, and then we retrace again. And then that might be it. It could be a full-fledged reversal. We don't know yet. We won't know until we continue to inch the market forward and see what it does. So let's go ahead and do that. Yeah, not much happening. We had a nice gap there. Markets do tend to like to fill gaps, but if you've ever heard that markets fill gaps, markets try to fill gaps. I mean, as you can see, the market came down and filled that gap about 50%, but it didn't fill it completely. And that's one thing that like people, oh yeah, markets fill their gaps. It's like, well, no, not always. It's not true. It doesn't always do it. There's a certain percentage, just like with everything else on the market. It's always a game of probabilities. There's always a percentage that the market's going to do something, right? Whatever that is. There's always a chance, but never a guarantee. So kind of sucks. For those of you who like guarantees, this is not the industry for you. This is not the career for you. There may not be any guarantees. Okay, so the market's kind of coming down here. What we can do is we can look to get long because the market did break above the structure point. I would say it's difficult to say where to measure. I would want to measure it back here personally, from this swing low to the swing high. I would want to measure it back there. The whole gap and everything, the market could kind of come back and try to refill that, possibly. Let's zoom out here, see if we have any other major structure. You have a structure level here, at about 92.84. You got a structure level here at 92.22. They have another structure level here at 91.14. If I was looking at this trend and I was looking at where the halfway point is, I'd say it's here around the 91.14 price level. So that's kind of what I see. So this is probably our best bet. This is like halfway, not really midway, but when this market comes back in, so the market broke structure, ideally, it will retrace back into previous structure. So if you look left, structure leaves clues, like I said before. It will face support. You see, it'll face support from all the structure back here, from this structure, and these here. So the idea is that hopefully there will be so much support that it will respect that support, and it will rally from there on. But there, again, no guarantees whatsoever when it comes to trading. So this is why you got to do your testing, guys. You got to do your testing. You got to make sure that you're going to be risking your hard-earned money in the market. You better make sure that you know that there's a positive expectancy, right? You better make sure the strategy is going to work. Don't throw money at a strategy where you have no idea what's going to happen. That is the definition of gambling. When you're risking money and you have no idea what happens, yeah, that's gambling. There's a lot of people doing that in the markets with their the stock market with their 401ks. They have no idea. They don't know anything. They're basically gambling. They don't think they are because they think they're trusting people who know what they're doing. But frankly, they're trusting maybe I shouldn't say it because I'm not licensed, and maybe people might get mad at me for saying it. But, in reality, I don't trust other people with my money. I guess I shouldn't say that 100%. It's not exclusively true. I do have a financial advisor, but I don't use him like most people use their financial advisors. There are a lot of features that financial advisors can help with. And they offer a lot of good services, but I don't really let him invest my money, all right? I like to handle most of that. Granted, my wife has a 401k. My wife has a traditional job with a 401k that is being matched by the corporation. Well, sort of. She's contract work right now, so technically they're not matching. But if she was, they'd match her stuff and whatnot, and I haven't taken the money out. I probably won't do it. I don't like the idea of taking a 10% loss, but at the same time, I also don't really like the idea that money is sitting there and I can't touch it, for the most part. So, and I'm not interested in taking a loan out against it. So, I don't know. That type of stuff, I don't like 401ks. I don't like the traditional avenues of investing, but it's difficult for me because it's like, while I disagree with that stuff, I'm not sure 100% what I would do. I mean, do I just take the money out? I don't like the idea of doing that. So anyways, we went ahead, we drew our stuff in here. So now we're just kind of waiting and seeing what's going to happen. Okay, so we did get long, or we ended our trade. We got filled. We are currently, entered into this trade at 93.40. But let's go ahead and do the dates here. So it says September 25th at what appears to be 4 a.m. Let's go ahead and enter that in. So the risk reward ratio is in my favor, so that's good. So everything checks out. So we can go ahead and take this trade. Now, because it's counter to the current trend, this could just be a retracement. Like I said, a 2 drives complex pullback, whatever. And it could be that I'm trying to go long here because I'm taking the bet that this is actually going to, this is the reversal, and the trend is reversed, and now we're going to go bullish. So that's what I'm trying to take the bet of. This may not be. This may just be a temporary move, counter trend, right? Counter to the main trend. So I don't know. We're just going to have to wait and see. So let's go ahead and inch the market forward and find out. Yeah, it's not looking good. I mean, we're still going down. Granted, there's always a possibility it could go back up again. Oh, had a big jump up there. Well, maybe. I don't know. That big jump up doesn't exactly mean it doesn't mean anything. Well, it means that there could be a lot of bullish momentum. But the Forex market is one of the most volatile markets in the world. I don't know if it's more volatile than the cryptocurrencies or what, but we're still haven't put a triple top in there. Let's see, we had a break of the triple top. Oh, no, we broke the triple top, so that's not there anymore. At least that's not valid anymore. And we're still just heading up. Now, what you could also do is, because you broke the market here, you broke structure here to the upside, you could have taken this trade. You could take this trade. You might even be able to take this trade. We could look to try that, but if it goes badly on us, then that could be double losses, and that may not be something that we want to do, right? So, while it's possible, I mean, let's go ahead and try it. Let's try it. Just for kicks and giggles. I mean, my trading strategy does allow me to do. I can't take an opposite trade inside of the consolidation of the overall largest trade that we're taking, but I can take a trade in the same direction of the overall the overall main trade that we're involved in. So let's go ahead. 10 pips below the low, 93.77. What was that? 93.77.0. Okay. 97.77.2. Okay, 2 is the lowest we're going to get. Going to put our green line here. Well, you know what? Oh man, we're already kind of using these colors. We'll have to do alternative colors. Let's do like a forest green here, like a dark red. Let's do a brown or fire brick. Like fire brick, that sounds cool. And then let's go ahead and find oh gosh, I don't even know, like an orange color for the entry. Oh, orange right there. Okay. So the market came up here. It came down. We got long. Okay, I'm going to assume that let's just pretend that we got long when it actually happened. The market hasn't come to fruition yet. We don't know what's going to happen here, or we can assume that we get long. Right? Because we got a second chance to get long anyways. I'm going to say we got long back here instead of here, but it doesn't really matter because we were able to enter this trade one way or the other. So let's go ahead and see what happens. This could be a really bad idea. This could increase our losses if this goes against us. But let's find out. So this is October 8th. All right, so new trade. We got October 8th, 2013. We got, let's see, October. All right, so we got it. All right, so let's go ahead and see what happens here. Boom, made money on the smaller trade, 54 bucks. Good deal, good deal. Not bad at all. All right, let's see what happens with the other larger trade. Let's see. All right. So looks like we're pushing up. I mean, are we going to continue to push higher? I don't know. We did not make a new high. We're getting rejected. Oh, no, we're popping up. There we go. Look at that, ladies and gents. That's freaking awesome. All right, so there we go. So we were able to go ahead and get involved, and we made money. We doubled our money because we took 2 separate trades. Not bad at all. And you know what? Let's go ahead and stop there for now. You know, we found 3 different trades. 1 was a loser, 2 were winners. That's pretty cool. You guys get the idea, right? So I'm not going to be showing you every single trade because I think that would be mind-numbingly boring. But I am going to show you the process, the overall process that you go through in order to do this type of stuff. So anyways, that's going to be it for the episode. Hope you guys enjoyed it. If you did, make sure to hit the thumbs up button. Make sure to subscribe. And if you like this content, you know, hit the alert button, that bell in wherever, the top right corner, wherever it is. Hit the bell button so you get alerted anytime I post a video here on the channel. And if you guys like what I'm doing here, then please share the show. It's the #1 thing you guys can do to help me grow this channel. I think that the world would be a much better place if we all managed our money better. If we learned how to grow our money, if we learned how to manage the money and get out of debt and all that kind of stuff, I think that would make the world a better place. Because let's be honest, everyone has problems. But at the center of most of those problems for most people is money, right? They don't know how to manage it. They certainly don't know how to make it, and they struggle to know how to grow it. If we learn how to manage it, make it, and then grow it, these are things, I think that will solve a lot of the problems that exist in the world today. Obviously not all issues, right? But, I think it would really help a lot of people. So if you guys are liking this content and you want to see more of it, and you think you got some friends in your life who you think would get a lot of value out of it, then make sure to share it and, help me to grow this channel. So if you guys will do that, I'll see you guys in the next episode. As always, know the risks, plan accordingly. Have a great day.